my friends. Welcome to Sonia's Real Estate Connection. This is the really real real estate connection because I like to keep it real and keep it 100 and be true to my listening audience. I don't like to sugarcoat anything, I just like to tell it like it is. All right, today is June 21st, the year 2020. It is also Father's Day, so I want to wish all of our fathers and father figures a happy Father's Day today. God bless you and thank you for all that you do. All the guys on the front lines and behind the scenes and in between, you are appreciated. We truly appreciate you, everything that you do. It is truly, truly appreciated. Thank you. Thank you so much. It is a pleasure and an honor to be here with you today and serve in this capacity. On behalf of Midwest Executive Realty and Prestige Property Management Services, I want to thank you for taking the time to tune in to today's episode. And once again, I'm your hostess, Sonia Mays, real estate broker and owner at Midwest Executive Realty at Park Place in Milwaukee, Wisconsin. Our office is located in the 53224 zip code area. We are just east of Highway 145 and west of 107th and Good Hope Road on the northwest side of Milwaukee. Just minutes away from Menominee Falls and Germantown. I always like to say that we have the best of both worlds, and of course we're happy to serve our wonderful audience and clients and customers. I am a full-time licensed broker, proud to serve the greater Milwaukee and surrounding areas in southeastern Wisconsin in the great state of Wisconsin. All right, today's topic is buyer beware. It's a seller's market. Buyers beware. It's a seller's market. Did you know that? You guys know that? I'm sure you do. Buyer beware. It's a seller's market. I think this is a very important and timely topic to explore today, given the current market that we're in. And as many of you know, I'm very active in the field. I represent buyers and sellers for residential and commercial transactions, and of course also offer property management services. In the real estate transactions that I'm involved in, I'm noticing lately that it would appear that a lot of buyers and even buyers agents, and I would venture to say that even some of the buyers lenders seem to be operating as if we are still in a buyer's market. And now we know that that is no longer the case in today's market, right? So why is that? Well, I think what happened, and this is just my personal opinion, but I think that we were in a buyer's market for so long after the market crash of 2008. I think that we remained in a buyer's market for such a long time. I mean, a long time, all the way until 2018 or maybe 2016, 17, 18, when the market started to show signs of correction and restabilization. So, almost 10 years, or maybe somewhere between 8 and 10 years, buyers enjoyed having the upper hand because it was a buyer's market for so long. There was a surplus of inventory. We had high inventory levels, high levels of supply, and low levels of demand. So buyers were in demand for a long time. I think they got comfortable in that space, myself included. As a buyer investor, and who was purchasing back then and looking at the real estate prices now, I can't find the deals that were found many years ago, several years ago. So I think that buyers really got comfortable in that space. Now the tides have turned, and we're no longer in that space, right? So we don't have a surplus of inventory. We don't have the rock bottom pricing that we once saw. We don't have foreclosures on every block, like we saw back in, the 2008 era, 2009 and on into 2010. And back then, I was just getting started in real estate, and I made to be honest, I made a killing because I was selling foreclosures. I specialized in the REO foreclosure market, which was a niche market, and that was my background. So, first year, second year in the business, and I made a killing in that business. Six-figure income. Top producer, top agent at my office. Specialized in that market niche, and it was a very specialized segment of the real estate market. So it was a very interesting time to be in real estate, and with the oversupply of foreclosures and the housing inventory being at a surplus, and of course not enough buyers. Now, fast forward 10 years later, we're at opposite ends of the spectrum. So we've had to make some adjustments, right? I've made adjustments. Many of us have made adjustments in our strategies, in our approach to real estate investing and acquisition and liquidation. So here we are, seller's market, buyers beware. All right, so let's take a closer look at the numbers. I always like to look at the numbers. Look at the data that is driving this. So, why are we here? Why is it a seller's market? What makes it so? Well, let's look at the Metro MLS report for May 2020. June report hasn't come out yet, I don't have it in my possession. So we'll look at the May report for 2020. And the Metro MLS report covers the four-county Milwaukee metropolitan area in southeastern Wisconsin. So it covers Milwaukee, Waukesha, Ozaukee, and Washington counties. So the report says new listings are down 24% from the same time last year. So in May of last year, there were over 2,700 listings. This year, same time, 2,054 listings. So new listings down 24%. Pending sales down 72%. That's a huge number. 72% pending sales. Last year there were 2,086 pending sales at around the same time last year. Today 581. So that's a 72% dip. And that's pending sales, which means properties with accepted offers under contract to close. Closed sales down 25%, 25.9% to be exact. Marketing time, days on market, average time 29 days. That's down 14%. So properties are staying on the market shorter time frames, just under a month. So marketing time, days on market, 29 days, which is down 14% from the same time last year. Median sales price up 2%. Median sales price is $250,000 compared to $244,000 same time last year. The housing affordability index is up 6.2% from 128 to 136, and that means it's going to cost you more to buy a house. Inventory of homes. This is where it gets interesting. Inventory of homes, available homes, actually increased 15%. From 3384 to 3913. And the month supply of inventory increased 27%. And here's the kicker. Last year this time we had 2.8 months of inventory. This year we have 2.2 months of inventory. So folks, guess what? That's still low. That's still below 3 months of inventory currently available. In terms of our monthly supply, and so that's still quite low because in a normal market we should be seeing somewhere between 5 and 7, or maybe 7 or 8 months of inventory. So we're not even at the halfway mark. So we still have less than 3 months of inventory. That's still quite low. Mortgage rates are still hovering around 3.3%, which is good news for home buyers and home purchasers. We like to see low mortgage interest rates, and those are around 3.3% according to the report. And I've been seeing them around about 3.75% is what I'm seeing. So that's good. Mortgage rates are still historically low, and that's always a good thing for our purchasers and buyers seeking financing. Showing activity actually ticked upward 4%. That means buyers are starting to look again and get out and look at properties and homes, even amidst the COVID-19 pandemic restrictions. So again, showing activity up 4%. All All right, so that's where we're at in terms of the numbers in the Metro MLS market report for May 2020. So being in the seller's market is quite different than several years ago, but the tides have definitely turned. And for many buyers that are trying to navigate your way through this market, I would strongly encourage and advise you to have a strong partner, strong team in your corner, a strong partner in your corner. Make sure you have an agent or a broker who understands this market. Make sure you have someone who can operate effectively in this market, because not everyone can do that. If you're seeking financing or even if you're paying cash, you want to have a good, solid, strong financial partner in your corner, a lender or banker, someone who understands this market, someone who can operate effectively in this market, someone you can trust, someone who won't mislead you, who won't misguide you, who won't give you bad advice, ill advice, because it could cost you the tens and thousands of dollars. And I say that because we've had some situations that have come across the table and ended up costing the clients, not only did they lose the property, but they ended up having to pay thousands of dollars. I'll give you an example. Let's say we had a property that was listed for sale, got an accepted, of course it had multiple offers, got an accepted offer. The inspection contingency passed, so no issues there. Property went through inspection, everything cleared. The appraisal contingency passed. The house appraised above asking price, so that contingency cleared. Financing contingency passed. Buyers were approved for the loan, so they received their final loan approval and loan commitment. Closing was set, scheduled. They did their final walkthrough. No issues were communicated to the sellers or the seller's broker. Sellers went to closing. Buyers were a no-show. Several hours later, after the scheduled closing, sellers got word that the buyers backed out. There was no valid reason that was given. Maybe they got cold feet. Something else happened. Whatever the case was, the buyers backed out. And the sellers were obviously very disappointed. They were very livid, very upset. This was a situation where it was a family. They moved all of their furniture and everything out of the house 2 or 3 weeks prior to the closing. They put everything in storage. They went and got a hotel room. They stayed in a hotel room, so it was a family, husband, wife, children, pets, all of that. So they had rental, storage costs. They had a hotel cost, other expenses for over a month. They got an attorney. The sellers sued the buyers for breach of contract. They won. The sellers won, and the buyers ended up having to pay over $10,000 in damages. Plus the attorney fees and cost and other items, so it probably cost the buyers somewhere between $15,000-$20,000 in damages due to the breach of the contract. So you want to make sure that you have a strong agent and broker on in your corner that can help navigate through through these contracts and the sales, whether you're buying or selling. Someone that can help you navigate through that contract, because we're seeing a lot of buyers who may be receiving, I don't know if they're getting bad advice or ill advice or just not properly informed in terms of the contingencies and earnest money closings and things of that nature. So to my agents, if you're working with first time buyers or even seasoned buyers who are a little bit uncomfortable in this current market, make sure you properly coach them, advise them, give them correct and proper information in a timely manner, because with the contracts, time is of the essence with all things, unless otherwise stated in the contract. And properly coach them through the process. Make sure that they understand that this is serious business. Once they sign a contract, once it's fully signed and executed by all parties, it becomes a legally binding contract that they could get sued for if they are in breach, if they are found to be in breach. One of the ways that they can breach the contract is by not delivering earnest money by the due date. And we've been seeing this a lot. So we have buyers who they want to do the inspection before delivering earnest money. But then they earn, and so they say they do the inspection, and they say, oh, they don't want to go through with it. So then they don't want to deliver earnest money. Well, unfortunately, if there's a signed binding contract and if they fail to deliver earnest money by the due date, then that constitutes breach of contract, and so the seller would have grounds to, potentially sue. The buyers for breach of that contract, or sue the other party for breach of that contract. Now, I always recommend talk to an attorney. I always advise that the parties consult with an attorney for further guidance on the legal matters concerning the contract. But those are just some of the things that we've come across, we've been seeing in this market. As you know, this is a very litigious society in which we're in, and some people have their lawyers on speed dial, ready to go at the first instance of malice or misconstrued or miscommunication, whatever the case may be. So you just got to be very careful with everything. Make sure you got your thinking cap on, put on your business cap, and remember that this is a business transaction. It's nothing personal. It is a business. People's lives are at stake. People invest a lot of time and money and effort into these situations, like with the example that I just discussed with the sellers who, moved all of their furniture into storage, moved into a hotel room, and had expenses and things that were constantly accruing and incurring, and took time off from work, and so they had to pay for all of that, and that became a part of their lawsuit. So you got to be very careful with these things, and make sure you dot all your I's, cross the T's, and again, buyers beware. It is a seller's market, and in some instances there's no we always say buyer's remorse. But you just got to be careful with that, because you might not even be able to rely on that in terms of the contract. You got to be aware of what the contract states. And if you are able to perform and meet the obligations under that contract. So in this market, again, buyers beware. It is a seller's market. Sellers have the upper hand. They are in demand right now. And keep that in mind when searching for properties and submitting offers. Just keep that in mind. There is a way that you can submit a winning offer. And so we'd love to talk to you about that in more detail, and that we're running out of time here today, but we can certainly explore that at the next session, one of our upcoming sessions. So on that note, I will wrap things up as we come to a close for this episode. I want to thank you again for tuning in, and just take a pause here and let you know the source of the information from today's show. For those inquiring minds that want to know, the information and the data referenced earlier was derived from the Metro MLS May 2020 Market Report and Monthly Indicators Report. So that's the source of the information that was shared today for those inquiring minds that want to know. All right. Thank you so much for tuning in to another episode of Sonia's Real Estate Connection. It is always my pleasure and honor to serve my beautiful listening audience in this capacity. And folks, as always, if you have any questions or feedback about today's episode or any other topics, feel free to send them in, give us a call. You can reach us toll free at 844-777-7725. Again, that toll free number is 844-777-7725, or send an email to info@midexec.com, info@midexec.com, or check out the website, midwestexecutiverealty.com. Again, that website, midwestexecutiverealty.com. Thank you so much. It's always a pleasure. I look forward to talking with you again real soon. Make it a great day. And please be safe, stay well, and be healthy. God bless.